Currency revalue opinions and news on a cold Saturday morning for many December 17, 2016. Stay warm everyone. First up by one who believes. Still expecting GCR before Santa's Day. We are in the final days/hours and the disinformation will be coming in strong. Keep your currency, say no to those who want to bring you down. According to Zora's call tonight, Prime Creator has planned for the GCR to arrive before Santa's Day. TikTok. Take one who believes with a big OL grain of salt LOL. Now for more bits in D-land. DLR, if you fell down yesterday, stand up today. H.G. Wells. The USD hit over 103.00 yesterday. History in many numbers of massiveness. From Samson, an emergency prevents Abadi attend a conference of foreign visit to Karbala. Prevent an emergency from the post of Prime Minister Haider al-Abadi, said Friday in effective ways. And it was scheduled to participate in the Abadi ambassadors' 5th conference held by the Foreign Ministry headquarters this morning and continue until next Sunday, but Foreign Minister Ibrahim al-Jafari transfer apology Abadi attend because of emergency circumstances. He attended the conference President Fuad Maysam and Parliament Speaker Salim al-Yaburi. He also announced Karbala Governor Akil Turai during his inauguration of the city of Mr. Guardians for the Zayuran, which delayed its participation. Palmatmer, he was waiting for the arrival of the Prime Minister of the province today, but I apologize for an emergency. Foreign Minister and the Governor of Karbala did not explain the reason for emergency situation. He did not issue a clarification from the Prime Minister's office. Emirip, wondering what emergency situation is going on, that the Prime Minister's office is not willing to explain. DON 961, U.S. interest rate hike turns the outlook for the global financial system. In the media center, comments on U.S. rate hike turns the outlook for the global financial system closed. Although the decision of the U.S. interest rate hike had been expected on a large scale, but it represents a significant shift in the fiscal policies of major countries submerged in monetary easing and money printing policies, especially in the Euro and Japan region, and represents a warning from the creation of a global bubble could threaten the future of Linden financial system. U.S. interest rates moved away from all those in the major industrialized countries, while the Federal Reserve raised its benchmark interest rate a quarter percentage point to 0.75%, at a time when interest rates are moving in the Eurozone, Britain, and Japan near zero, and in some countries such as Switzerland and Scandinavia in negative territory. Analysts say the decision overturns the prospects for the global financial system because of the privately largest economy in the world to tighten fiscal policy at a time when racing other industrialized countries in the monetary easing and money printing policies, especially in the Eurozone and Japan. Some argue that the decision represents a warning whistle warning of creating a global bubble could threaten the future of the global financial system. The board attributed the decision to increase interest rates to achieve its forecast on inflation and the labor market. Analysts in varied positions in the United States and outside of the resolution, as critics warned it could lead to a slowdown in lending growth and declining inflation in the United States to the limits of falling into a spiral of deflation. And gaining a step, the Fed greater momentum in the statement, issued in conjunction with the announcement of the decision, and said that it expected to increase its key interest rate at a faster pace during the current year. Janet Yellen, hike comes as a result of improved economic indicators and we expect further improvement. The statement pointed out that 15 of the 17 members of the Open Market Committee concerned with monetary policy in the Council's management, expecting high interest rate at least twice over the next year by a quarter percentage point in each once. It is expected 12 members of the committee now is the arrival of the interest rate to more than 1.25% over the next year. This is the second increase in U.S. interest rates after it was filed in December 2015 by a similar amount for the first time in 10 years. The Council said in a statement that monetary policy stance remains adaptive and supported increasing the strength of the labor market and to return inflation to 2%, but inflation is still below that target rate. He pointed to the significant growth of jobs with low unemployment rate currently at 4.6%, while economic activity has been growing at a moderate pace since the middle of this year, and expects the Council the development of economic activity in a way to ensure a gradual increase of the key interest rate. U.S. stock markets were recorded as well as European, yesterday, a big rise, led by banking stocks, which confuse the low interest rates and financial activities, while gold prices fell to their lowest level in 10 months. The dollar continued to rise yesterday, reaching its highest level in 14 years Wednesday after jumping by 0.8% against a basket of major currencies. As expected change in U.S. interest rates, we have implemented the Gulf Cooperation Council, which pegged their currencies to the dollar countries, the immediate lifting of interest rates, with the exception of Oman. Central banks and raised in Saudi Arabia, UAE, Kuwait, Bahrain, Qatar, the interest rates by a quarter percentage point, despite the fact that Kuwait pegs its currency to a basket of world currencies. Wondering many observers about the size of the impact of the U.S. decision on the excessive fiscal policies in a monetary easing, such as the Eurozone, which sits interest rates were close to zero, and in light of the unprecedented to buy assets and flood the market with liquidity in order to prevent deflation program. Japan is also spearheading a broad program of cash to facilitate and stabilize interest rates in decades at 0%. Even countries such as Switzerland, Sweden, and Denmark impose negative interest on deposits of banks with central banks in cash to facilitate the unprecedented policies. The chairwoman of the council, Janet Yellen, said in a press conference that a rate hike at this time comes as a result of improvement in U.S. economic indicators. We expect continued improvement over the next year. More later. Thanks. IQDcalls.com